Hello, everyone. Thanks for joining and welcome back. Our guest today is a good friend of mine, Henry Weingarten, Managing Director at the Astrologers Fund. Henry, how are you?
We're doing great. You may not know it, but the precious metals market is really rocking and rolling.
Yeah, look at silver, Henry, almost $50. Look at gold, almost that $4,000 mark. I'm gonna put up on the screen right now the PowerPoints that you've shared with me that we want to get into. So it's Wall Street
Right.
Silver, October 6th today. What's happening here in this first slide here?
Well, the first thing is, do we have a triple top?
Okay.
You know, obviously there's increasing investor demand. There's profits. There's financing available, and the wind's behind the sails. But remember, in January 1980, we got to 50 and didn't make it. In 2011, there was a great rally. We shorted silver around 49 and change, and it reversed sharply. So the question is, this month, maybe, I mean, we're pretty close at 48 and a half, or between November and January, will we get to 50, or is it going to be a triple top? And if it's a triple top, you'll see a correction.
What does a triple top mean? Sorry, very quickly.
Well, in technical analysis, you have double tops and triple tops. It's
Okay.
when they get to resistance but don't make it. They keep trying. Like, for example, earlier today, the gold futures went up to $3,999.50. It
Right.
didn't make it to 4,000. Now, the odds are it probably will in the middle of the night, but if it doesn't and it keeps trying, then the markets go the other way.
Hmm.
Now, the interesting thing about the market that people have been looking forward to is there's a lot of fresh money coming in.
Okay.
This is very different. On the good side, we have generalist funds. That is to say, people who have not been in gold for probably forever or for 30 years are
Right.
now looking to gold because obviously gold companies are doing very well.
Hello, my fellow silver and gold stackers. Please hit the like and subscribe button. It will really help the silver and gold community grow. It'll help this channel grow, and I'd really appreciate it. Back to the video.
And you've got the crypto types in there who are basically even buying gold with crypto, which is sort of an interesting situation.
Right.
They consider themselves digital gold, which I don't. But this is the tricky part. This new money is not sticky. It's not based on fundamentals. It's based on momentum. So as long as there's momentum, they'll join the party and they'll keep adding to it. But if momentum stops, they run away.
Right.
So this is good because companies can raise money, but it's not great. Now, this is something I think your people will enjoy. We've all been brought up on the idea that you should have maybe 5% in your portfolio, maybe 10%.
Right.
I always thought that was very strange, though, because if gold goes up, say to, let's say to four, even 5,000, and the market drops 30, 40%, how is 5% going to do anything?
No, it
It
doesn't.
never
It's not
made any
enough.
sense to me. It's not
Right.
enough. So you have situations where traditionally people would go to 15 to 25 if things were difficult. And some people, especially if you were in places like, oh, Iran, or you were in Venezuela, or places like that, that you'd even go 30 to 50. And they would, so, but now this is the interesting thing, which we'll see in the next slide, which I think everyone's going to like. Here, and I got this thanks to Jeff Christian from CPM Group, which are very good people for the facts on gold. The 5-10% was based on work that was done in the 1980s. Work that brings it up from 1968 to December of this year suggests that you need closer to 25 to 30% of your portfolio in gold, and gold includes silver, by the way, of course. We're talking precious metals, in order to fully balance your portfolio against risk. Now, there are other ways to do it besides gold, but it does suggest what many people in gold have been saying, that gold is a seriously under, and gold, please, when I say gold, it means gold and silver. Gold and silver are a seriously undervalued asset. And this is some proof that if you want, it's one way to balance out your US dollar portfolio. There are others, but it is a way, and it's more than the 5%.
Hmm.
Now, this was very interesting because traditionally, when I was starting, there was what was called a 60-40 portfolio, 60% stocks, 40% bonds. And as you got older, the bond ratio would increase and the stock would go down. But recently, work, um, say from Morgan Stanley, suggested that may not be the optimal way. It may be better to have 6-20-20, 60 in stocks, 20 in US bonds, and 20 in alternate assets. And those alternate assets can be gold. In fact, the chief investment officer, Mike Wilson, suggested that that 20% be in gold. Now,
Wow.
when I read that initially, I said, "Uh-oh, buy gold immediately. It's jumping." But it turned out it was just he who said it. They're experimenting with various ideas to balance out the U.S. Bond. So, but it
Right.
is the fact that people are mentioning it.
Right.
So that's a great positive for precious metals that serious long-term investors are looking to add to it as an asset class, which is something I'm sure all your people have felt for many, many years.
Absolutely.
But now it's being joined by the big guys. Now, this is something else that we not all your readers will agree with me. Should you never sell gold and silver? And there are three answers to that question. The first answer, if you're buying gold and silver as a hedge to your portfolio for disasters, then there's never a good time to sell because then you don't have a hedge.
Right. Right.
If you're buying gold and silver as a long-term investment like real estate to buy and hold, because if you hold real estate for 20 years, you make money. And I was around when silver was selling for $4. Then you don't need to sell ever.
Right.
But, and this is the but, if you're trading it or if you're investing short to intermediate term, which is say under 3 years, then there are most definitely times to sell. That is to say, you can make more money. For example, in 2011, we sold out silver when it was $30, but we shorted it from 49, way below that. Now, that's for traders and those for people with shorter term horizons. So to me, it depends on why do you own gold and silver. If it's a
Absolutely.
hedge, if it's a hedge, no. If it's a long-term investment, no. But if you want to maximize your portfolio, yes. What we're recommending is to sell or stop about 20% of gold and silver, but to use that, as I've said before, to buy gold and silver stocks because there's a better investment. And we'll show you some numbers why that's the case. If we take three foundation stocks, and I thank Wheaton Precious Metals for suggesting that, we take one of our two or three favorite gold stocks, Agnico Eagle. Now, gold is up as we speak about 48% from the beginning of this year. Agnico Eagle is up 116%.
Right.
Silver, it's up about 58% today. Our favorite silver stock, Vizsla Silver, up 154%.
Welcome to the Cayman Islands, a premier offshore jurisdiction where natural beauty meets financial stability. Here, your wealth is more than secure. It thrives in one of the most trusted and respected financial centers in the world. For over a decade, SWP has been the trusted choice for precious metal investors worldwide. Our purpose-built 6,000 square foot facility sets a new standard in precious metals storage. We are proud to be one of the only vault operators approved by the London Bullion Market Association. Beyond safeguarding your assets, we're committed to making a difference in our community by supporting local causes and events that reflect our values. As we continue to expand and innovate our services, we ensure that your wealth is safe and strategically positioned to shield you from the uncertainties that lie ahead. Strategic wealth preservation, trusted today and ready for tomorrow.
And if you do royalty and streaming, which is a very conservative way to play precious metals, the best one probably being Wheaton Precious Metals, it's say about 50% versus 95%. In other words, you have a double return. Now, this doesn't imply to all gold and silver stocks. It implies to quality producers and et cetera.
Absolutely.
But the point is, and listen to this, this is extremely important. Many stocks that we follow have rallied more than 100%, more than double physical gold and silver. So let us assume that from today till the end of the year, gold and silver continues to rally.
Right.
You will make more in quality stocks. They'll rally more. Second, let's assume gold and silver is range bound now, not neutral. Gold and silver stocks will rally from here because they're so profitable.
Right.
But if gold and silver go down 10%, it will short-term drop, but then they'll rally again. Because do you realize that the average cost of a gold producer is $1,500? The average cost of a silver producer is $20. Money. Why do I want to pay $4,000 for gold when I can get it for $1,500?
Right.
Why do I
Yeah.
want to spend $50 for silver when I can buy it for 20? And by the way, that's average. Good companies are even less.
Right.
Now go back for a second because there's one
Sure.
other point that I was saying.
Sure.
Today, if you're involved in the gold and silver market, it's like shooting fish in a barrel. Almost everything is going up. But remember, when the tide goes out, only the quality stocks will remain while many others will dry up. So, yes, as a momentum player, almost anything, gold will go up, just like with the word AI is, or internet, or robotics. But not all the stocks are good. You have to pay attention.
Absolutely.
So, our general advice is the following. By and large, buy wholesale, not retail, buy quality producers or near producers. You can trade anything, but only invest in quality because if it goes
Absolutely.
up or down, doesn't matter.
Right.
But when gold and silver stocks are full or overvalued, protect. Now, how do you protect? You can reduce, you can sell calls, you can do a trailing stop because it doesn't stay up forever.
Right.
Or you can do what we did till recently, which is pair trade, long one stock, short another, or long the stock and sell gold and silver because you can make money. Most important is money management. Don't put all your money into one item. Uh, I mean, people make that mistake.
Absolutely.
So our general view is if you want to make more money with less risk, that's what every person wants to do in the markets.
Right.
You have to be aware that there are great physical and economic challenges ahead. We're almost definite the market will be down. If it's not down shortly, it will be down in the winter and spring. So gold and silver may do very well in that, although there are some scenarios where it won't. The most important thing is to have the ability to buy if and when markets panic, as they did 2 years ago in October. As long as you have that money, don't be margin to kazoo.
Right.
And good stock picking and trading will outperform generalized index funds. You can do some index funds in gold and silver. They've done very well if you don't know how to pick. But remember, markets are going to be very different in November or by November 2026. And there are various scenarios. You may have one or another, but make sure you have the ability to do it. And you should, if you like gold and silver, which obviously all your audience does,
Yeah.
then put a few foundation stocks in. What we recommend is slow. If you have no exposure, which I don't think is your audience at all, then start now. If you do have full exposure, then accumulate a little bit more slowly and choose out your favorite stocks and commodities and add to them. So that's basically our views at the moment.
Absolutely. And what is this here? What is this slide here? This is the
Oh,
astrologer's funds
this is
gold.
us. We basically are doing a number of videos and some webinars, and you can get it on basically YouTube, Henry Weingarten. But our general approach is when we trade, we like to use astrology and technicals. We tend to come in early, and to be fair, we tend to exit early in stages.
Right.
And when we do investing, we do fundamentals in astrology. That's to
Ab-
say, we time it.
Absolutely. And you know what? I want to thank you so much, Henry, for giving us this incredible knowledge and that slideshow and that presentation today. Because right now, what an incredible climate we're in for precious metals, really exciting times. But at the same time, you're giving us the world in the you know in a different view where hey, you
Yeah,
can make, if you're a day trader, you can make more money and take more upside. If you're if you're just hedging and you're investing long term, stay in your gold and silver.
right.
But it's really nice to get that different perspective from you.
Yeah.
I'm gonna put your links in the description below so everyone can find
Thank
you.
you.
I really want them to follow your work, Henry. But yeah, thank you so much for coming down. Where
And by the way, we're going to be adding a whole bunch of silver stocks outside of the our favorite one because there are about 8 or 10 that we like, all of which are good. And you basically want to get them. Now, some of these stocks are up 10 times this year. So we're a
Wow,
little, so there we're sort of waiting for a pullback but others haven't been. So you want to sort of choose it based on what its valuation is in relation to, you know,
the value.
um, yeah, the value, the valuation to the value. That's
Yeah.
very clever. Okay.
Well, thank you so much, Henry, for joining us.
My pleasure.
Everyone watching this, highly recommend you go follow Henry, go follow the Astrologers Fund, follow their work. And as the market develops, Henry, would love to have you back on for another presentation. That was
Will do.
awesome.
Absolutely.
Talk to you soon.
Sure.